Welcome to this channel, traders. Today I want us to look at the best strategy and best entry rule for USDCAD, because remember traders, if you are to have the best strategy, the strategy should have a different entry rule for each of these pairs and a different entry time to place trades on each of these pairs, because these are currencies from different countries and the countries open their trading businesses at different times. So you can't have one strategy for everything. That's what most people ask me, what is your best strategy? You can't have one strategy for everything. That's why we've been winning sometimes and losing sometimes on the older strategies, because we didn't have this kind of knowledge, but now we're learning it. So if you are not a member of this channel, make sure to subscribe so that you do not miss out. Okay, so let's go ahead and look at USDCAD. I'm on the 5-minute time frame. That's where I'm going to be doing the analysis, even though you can switch to the 15-minute or 1 minute depending on the requirement. We're going to look at that as I show you the examples. So USDCAD, remember, USDCAD will make its move on the New York session, even though it might start moving from the London because of USD, but really it will make its move on the New York session. Let me just open the sessions indicator. The blue one is London, this one orangish is New York. So what you do is you have to identify the breakout into the New York session, and the strategy that we are going to use is the key level strategy. So what you do for the key level strategy, or just to save time, let me just go ahead and analyze, and I will explain as I analyze. Okay, so right here, first thing, you identify the trend into the London session. So you can see that it was sort of an uptrend. On an uptrend, you start by marking the highest point. Okay, that was the highest point on the uptrend, and then that highest point started right there. Okay, it started right there. Let me just show you this for those who don't know the key level strategy. If price is moving like this, okay, if I say this is the highest point, that highest point started on this pivot, because price moves from left to right. It started from here up to there. So that is what I am basically doing. What you wait for now is that on the New York session, if price closes below this, you place a sell. If it closes above that, you place a buy. Okay, so right here, you place a sell. You could have entered a sell right there. You put your stop loss above that key level. That's the safest place. And then your TP, you can use a risk to reward of 2, okay, or 2.5. Let's proceed. Let me just remove everything I drew on that first thing. Okay, right here it looks a bit tricky because this looks like a downtrend. So on a downtrend, you start by identifying the lowest point and the point where that lowest point began. But really, it's not so. What you need to look at is this last move, and this last move is an uptrend. So on an uptrend, remember, you start by identifying the highest point. Okay, maybe just to show you, let's switch to the 1 minute time frame. Okay, right here on the 1 minute, it looks a bit clearer. So you can see that the last move on the London session was an uptrend, and on an uptrend, you start by identifying the highest point and the point where it began. Okay, the area where this highest point began is, one can say it's there. Okay, it's there. So you mark that area right there. Okay, let's go back to the 5 minute time frame. Okay, right here, let's remove this thing so that we can see clearly. So those are the key levels that we have drawn. What you do is you could have entered a sell trade right there. Okay, when price closed below the key level, or even right there from the 1 minute, you could have entered there. You put your stop loss above that key level and your TP of 1 to 2. Okay, right here it looks tricky. The highest point was that one, and that highest point began down here. It began down here, so there was no trade here. Price on New York didn't close on either side. Right here it is an uptrend. On an uptrend, you start by identifying the highest point on the London, and that highest point was this spike there. Okay, that spike started down here. So on the New York session, price closed above. You could have taken a buy, put your stop loss below that. Okay, right here I think it could have been a bad trade because you start by marking the lowest point, and that lowest point started up there. Okay, it started up there. Okay, price didn't really close above that, because if you can extend and watch the whole of this key level, see that there it only went up by a week. It didn't close above, so you wouldn't have taken a trade here. Okay, let's see. Okay, right here it's an uptrend on the London. If the trend is clear on the London, you are very likely to find good trades. But if it is not, like the point where we come from here, you can see from the London that the trend was not clear. So right here it was an uptrend. You start by marking the highest point, and that highest point began right there. Okay, so price closed below that, you could have entered a sell. Right here again you can see that it's not clear from London, giving you an idea that you might have a hard time on New York. Okay, so it wasn't a clear trend. It would be just best to skip this thing. It's not every day that you find entries. That's why you need knowledge on how to trade all the pairs and on every of the sessions. So right here the trend was clear on the London, giving you the idea that New York will be best. Okay, so it was a downtrend this time. On a downtrend, you start by identifying the lowest point. The lowest point was that week. Okay, identify the lowest point on London. That lowest point on London started there. Okay, those were your guiding principles. So when price went into your New York, it ended up closing below this. You could have entered a sell. It's as easy as that, traders. I wish you the best as you try this out. Thank you for watching.